put a big chunk in one part of real estate, okay, or you will invest in an asset, okay, which can be tagged to the economy. If we talk about passive investing, so you have to understand what a mutual fund is first, and with the potential India has, next 25 years you invest in Nifty 50 and sit down there, even you go with an index fund, you are going to make money. Active investing is, unless you are into the market.
So what would you say on that front? What are your thoughts on that front?
See, whether you're active or passive, you have to do your basic research, right?
Of course. Right. Even passive investors needs to do research.
Exactly. The passive investors have to do a research in such a way that where his funds shall go, right?
Right.
So who is the best fund manager available? Okay, what is the best fund available, right? And again, he has to understand what his risk appetite is all about, right? Okay, so in bad times, okay, he should be supposed to see a specific fall. Okay, if he's only ready for that, then he has to go with an aggressive small cap, for example, for that matter, right? Okay, so this basic study is very, very imperative for both the both the categories. Okay, now if we talk about passive investing, so you have to understand what a mutual fund is first thing, for example, or a PMS is first, right? Okay, and then he has to again filter them out. Okay, whether that fits his appetite or not. Okay, and accordingly he has to just put in, and he has to leave things to the fund manager or the mutual fund scheme or whatever, right? And he need not diversify so much. Okay, if he understands the market, or if he understands, or if he studies the basic things of mutual fund industry, okay, he need not diversify also so much. Okay, he can just aramse take one large cap fund, one mid cap fund, and one small cap fund, right? Okay. These three things will do well for them. So passive or active, they have to do research. When it comes to active guys, these guys are in a dangerous zone, because what I feel is, see, the best zone to be in to make money for you is the expertise you have built for the last 10 years, right? If you are a techie, okay, you spend more time on your own technologies so that you can make more money over there. Okay, unless you have so much time to spend, okay, you need not come here, okay, spend so much time, okay, do some trial and errors, okay, lose good time of 5-6 years where you lose that compounding effect, okay, and you do nothing, okay, because I've seen people managing their own money and do nothing, right? 5 years, they listen to some news, okay, they just invest on it randomly, okay, they listen to some news, they invest on it. End of the day, okay, their portfolio will end up in such a way that they will be allocating only 90 or 85% of the money into 3 falling stocks, where the other 10% will be sitting in the profitable stocks.
Right.
So active investing is a very, very what do you say?
Yeah, it's a professional area, and non-professional should be very careful when charting into this territory.
Correct. And this world is built in such a way that we are all experts in different domains. Okay, we have to make uses of them, or in the sense we have to leverage with these people. Okay, I don't want to do carpenter because I don't know it, right? I'm not good at it. Okay, if I have to do it, I have to learn it, I have to do it, and I don't know whether the output will come well or not also, right? So active investing is, unless you are into the market, unless you are a professional finance or fund manager, otherwise active investing is not.
Basically, if someone wants to do active investing, then they should delegate it to somebody who is good at active investing.
Exactly. True. Exactly. So active or passive, they have to do their own research. Active guys, as said, like, okay, they will have to lose good time.
Right.
Because right, see, if you leave 3 years in the market, okay, good time where you see that 40-50%, and from there, what, the next 15 years, okay, your compounding will get diluted.
Right, permanently diluted in a way.
Permanently diluted, exactly. Right. Initially, when I was young, I used to think that options are the avenues of making so much money. Okay, even Warren Buffett used to say options are the financial weapons of mass destruction. Okay, then we don't even listen to that big wise man's advice. Right, he's such a proven man, and he hardly grows at 22% per annum.
Right, which is pretty good at from American standards, right?
Exactly. Even in the Indian standard, 22% is something really great. Or a period of time, or a 30 to 40 year of span, okay, 22% is
Right.
something phenomenal. See, if you grow at 25% per annum, you are going to make your money 10 times in 10 years.
Right.
In 20 years, you are going to make your money 100 times.
Right.
Right? See, the 30th year, like you are making money 1,000 times. That's huge, right? A guy who can start at 20, by 50, even if he has a crore today, he'll be making 1,000 crores. Being
Even if he
passive.
has 2 lakh, he'll make 10 crores.
Exactly. So
Hmm.
being passive, and you know the markets, right? Okay, they are highly scalable, right? You can go into
Right.
different category and different sectors. Okay, you can put so much money into. So, so the active investing is something people has to ponder about before really getting into it.
Right. Acha, I'll just bring out one point which I think is very interesting when people invest in stock market. They kind of forget this, is that we're talking about 20, 22, 25% return, which is actually in the long term, that's the higher end of the spectrum, right?
True.
But even if you look at the base level return, which is let's say 12 to 15%, let's say 12%, even that is pretty high when you see that the rental yields in India are around 3%, right?
Yes.
In India, people love buying a flat and giving it on rent, or buying something and giving it on rent, right? They'll buy a flat worth 50 lakhs from which they'll get a monthly rent of 25,000, which is 3% or something like that annually. You get 4 times your rent amount in an index fund.
True.
This is something people don't
No,
realize.
I'll just correct it here. Say, for example, I buy an apartment with 50 lakhs.
Yeah.
Or I'll give an example where my sister bought an apartment, or my sister's father-in-law bought an apartment in 2004 worth 5 lakhs.
Hmm.
Or say, for example, 6 lakhs.
Hmm.
Okay. It has been giving him almost 3% per annum yield,
Yeah.
right? And after 20 years, okay,
The
now
capital gain is there. Yeah.
after 20 years, they have sold it around 30 lakhs.
Okay.
Okay, meaning what? It has grown at around 9%, 8 to 9% per annum, right?
Okay.
Plus your 3% yield.
Hmm.
Let's factor in the cost of maintenance.
Yeah.
Take that of 1% per annum, right? So
Hmm.
they will fall around 10%, whereas equities are going to give you 13%.
At least, yeah.
Exactly. But the apartment in the next 10 years, I mean, they have sold it after 20 years. That's why they could get the rate of 8 to 9%. If they're selling it after 10 years, probably that may even come down.
Right.
Right. So now thing is, so whether you will opt a liquid channel, okay, to make more returns with around 12 to 15%. And again, you know, right? See, for example, we'll take one more example. SBI for the matter. Okay. Last
Hmm.
20 years, SBI has, see, you can trust SBI, right? When you're putting FD into SBI, you can trust SBI.
Right.
You can invest into SBI. You can own a chunk of SBI. SBI has given 15% returns.
Annually
CAGR.
compounded. Right.
Stagger, exactly. And you know, they give a dividend of consistent dividend of 1.5%.
Hmm.
So how much it is coming around? 16.5%.
Right.
So okay, again let's factor in the tax.
Hmm.
Okay. You take off your 10% long-term capital gains, again it's coming around 15%.
Right.
Right. So what is the story that you'll believe in? So whether you'll put a big chunk in one part of real estate, okay, or you will invest in an asset, okay, which can be tagged to the economy.
Correct.
If SBI fails, you know, right? I mean, anybody comes for that, man. Any government has to come and recapitalize it.
Correct. Too big to fail, basically.
Too big to fail. Exactly. Right. So this analogy of investing in this rental yielding real estate versus your equities, I'll go with equities because simple. For me, I have a chance of diversification here. So I just don't have one SBI, right? Okay, I have HDFC Bank for that matter. HDFC Bank is giving me again 16, 17%, and again some 0.5% maybe dividend, right? Okay, and I have 50 or 60 good companies to invest into, right? This particular real estate may fail, maybe, okay, but not my economy. A single chunk of real estate where I can easily diversify my chunk into 50 pieces and go with the economy, where the
Right.
probability of success is very, very, very high over there.
Exactly. Okay, so we have sort of in this discussion made a very valid set of points about investing in equity versus investing in real estate.